Hello everyone, I am Dr. Soundararaj. I am going to discuss with you a problem related to issue of shares on pro-rata basis and forfeiture after first call and another forfeiture after final call and also reissue of the forfeited shares. These are all a few details about me related to my career. After watching the video, if you really like the video, give a like to the video and do subscribe my channel as well. Let's get into the problem. Ambitions Limited issued a prospectus inviting applications for 2 lakh shares of 10 rupees each at a premium of 5 rupees per share payable as follows. The company is ready to issue 2 lakh shares. The par value of each share is 10 rupees, whereas each share is going to be issued at 15 rupees, which includes 5 rupees premium. And the 15 rupees is planned to be collected as 2.50 rupees per share on application, on allotment 7 rupees 50 paise, which includes premium of 5 rupees, on first call 4 rupees per share, and on final call 1 rupee per share. Applications were received for 3 lakh shares and allotment was made pro-rata to the applicants of 2,40,000 shares. The remaining applications being refused. Therefore, out of the applications of 3 lakh we received on behalf of the company, we have rejected 60,000 applications along with its money. Out of the remaining 2,40,000 applications, the company is going to allot 2 lakh shares. Therefore, excess applications we have received in this category is 40,000. Money received in excess on the application was adjusted towards the amount due on allotment. So therefore, the application money received on these 40,000 shares will be retained by the company and the same will be adjusted against allotment money due on the 2 lakh shares. Next paragraph. David, to whom 4,000 shares were allotted, failed to pay the balance allotment money, and on his failure to pay the first call, his shares were forfeited. Therefore, even before making the second call, immediately after making the first call, the 4,000 shares which were allotted to Mr. David were forfeited after serving due notice to Mr. David. See, Mr. David has paid only application money. He would have applied for 4,800 shares. Out of 4,800 shares, he is allotted with 4,000. How do you say that? Yes, out of 2,40,000 applications, the company has allotted 2 lakh shares. If you keep this ratio in mind, you can understand that out of 6 applications, 5 applications were accepted. That is what the understanding. So you can do the calculation of how many applications would have been filed by Mr. David. 2,40,000 applications divided by 2 lakh shares into 4,000 shares will give you 4,800 applications. So Mr. David, he paid the application money on 4,800 shares. That's all. He didn't pay the balance allotment money due on the 4,000 shares allotted to him. He also failed to pay the first call. So after making first call, since Mr. David failed to pay the first call also, the shares were forfeited from Mr. David. Then what about the next point? Madan, the holder of 6,000 shares, failed to pay the 2 calls and so his shares were also forfeited. Regarding Madan, the complication is a bit lesser. The reason, excess application money which would have been paid by Mr. Madan on the 6,000 shares allotted to him would have been adjusted against allotment money due on the 6,000 shares. When we come to the first call, he should pay the full amount of first call on the 6,000, but he failed. On the second call also, he should have paid the full money on the second call related to the 6,000 shares. That also he failed to pay. So, on his failure to pay the first and second call on the 6,000 shares allotted to Madan shares were forfeited after serving due notice. All these shares were sold to Mr. Robert, credited as fully paid for 8 rupees per share. Past journal entries to record the above issue of shares by the company. Now let's look at the first journal entry. Bank account debtor 3 lakh into 2.50, 7,50,000 to share application account 7,50,000. The second journal entry for transferring the share application money received for 2 lakh shares to share capital account. What is the journal entry? Share application account debtor 2 lakh into 2.50 to share capital account 2 lakh into 2.50, it comes to 5 lakh rupees, being the transfer of share application money on 2 lakh shares to share capital account. Application money on the rejected applications of 60,000 plus transferring the excess application money on the 40,000 shares to allotment to adjust the allotment money due on the 2 lakh shares which are going to be allotted by the company. So share application account debtor 1 lakh into 2.50 to share allotment 40,000 into 2.50 to bank account 60,000 into 2.50, being the transfer of share application money on 40,000 shares at the rate of 2.50 to share allotment account and the refund to applicants of 60,000 shares to whom no shares were allotted. The next one, we are going to make allotment of the 2 lakh shares. Share allotment account debtor, how much it is? Share allotment account debtor 2 lakh into 7.50. So share allotment account debtor 2 lakh into 7.50 comes to 15 lakhs. To share capital 2 lakh into 2.50 5 lakhs. To securities premium 2 lakh shares into 5 rupees, it comes to 10 lakh rupees, being share allotment money due. Now they have collected the balance allotment money. For that we have to look at the working. Let's look at the working. Total allotment money due on the 2 lakh shares. 2 lakh into 7.50, 15 lakhs. From this figure, they have subtracted the excess application money on the 40,000 shares. It comes to 1 lakh. So the balance allotment money to be collected from the shareholders of 2 lakh shares is 14 lakhs. Among those shareholders, one Mr. David, he failed to pay the balance allotment money due on the 4,000 shares allotted to him. Now, allotment amount not received on 4,000 shares allotted to David, that is calculated down here. If 2 lakh shares are allotted out of 2 lakh 40,000 applications, how many applications would have been submitted by Mr. David? It comes to 4,800, which has been calculated as I explained earlier. What is that? 2,40,000 applications divided by 2 lakh shares into 4,000 shares comes to 4,800 applications. Now the surplus money on application paid by Mr. David is calculated. How many excess applications filed by Mr. David? 800. 800 into 2.50, 2,000. So this is what the excess application money on the account of Mr. David. Amount due on allotment for the 4,000 shares allotted to Mr. David, 4,000 into 7.50, 30,000. From the 30,000, the excess application money on his own account, the amount of 2,000 is subtracted. Therefore, the company expected Mr. David to pay the balance allotment money of 28,000 that he failed. Therefore, from the 14 lakhs, the total allotment money due after adjusting excess application money for all the shareholders, allotment money unpaid by Mr. David, the amount of 28,000 is subtracted, and therefore the company would have finally received the balance allotment money amounted 13,72,000. That is what cash received on allotment by this Ambitions company. Let's look at the journal entry for the receipt of allotment money. Bank account debtor 13,72,000 to share allotment account 13,72,000 being receipt of share allotment money. Now let's make the first call on the 2 lakh shares. Share first call account debtor 2 lakh into 4 I believe. It comes to 8 lakhs. To share capital 8 lakhs being first call money due at the rate of 4 rupees per share on 2 lakh shares. Now, have all the shareholders paid the first call money? No. Mr. David failed to pay the first call money also on the 4,000 shares. And there is another shareholder named Mr. Madan. He failed to pay the first and second call. So regarding first call, on how many shares the company couldn't collect on 4,000 allotted to David on 6,000 allotted to Madan, totally on 10,000 shares, the company couldn't collect the first call money. Therefore, what we understand, on the remaining 1,90,000 shares, the company has collected the first call money. So, bank account debtor 7,60,000, which is nothing but 1,90,000 into 4 to share call account 7,60,000, being receipt of first call money on 1,90,000 shares, that is on 2 lakh minus shares of David and Madan, that comes to 1,90,000. Now let's go to forfeit the shares which were allotted to Mr. David. The 4,000 shares are forfeited here immediately after first call. Share capital account debtor 36,000. Securities premium account debtor 20,000. Let me explain how they have calculated these two figures. Share capital account 4,000 into 9. What is that 4,000 into 9? Yes. Called up value per share excluding premium at this stage what I refer before making the final call is 9 rupees per share. See, totally the company has asked for 14 rupees per share till the first call. The 14 rupees includes 5 rupees premium. You separate the 5 rupees from the 14 rupees called up value per share. What is the balance? It comes to 9. So called up value per share excluding premium at this stage is 9. So 4,000 into 9 comes to 36,000. Securities premium was not collected from Mr. David. So therefore, it has to be reversed and debited here. Securities premium account debtor 4,000 into 5, 20,000. Now what is this? 2 share allotment. What is the balance allotment money unpaid by Mr. David on 4,000 shares? We calculated as per the working, it is amounted 28,000. What is that he has not paid on first call? He has not paid 4 rupees per share on first call for the 4,000 shares. So 4,000 into 4, it comes to 16,000 rupees. 2 forfeited shares account 12,000. What is the only amount he paid? He filed 4,800 applications. He paid the application money at the rate of 2.50 per share on the 4,800 applications. It comes to 12,000 rupees. It was the only amount he paid. Of course, he was allotted with only 4,000 shares. But what was the total money paid by Mr. David? From the beginning, it is only 12,000 rupees. How I calculated it? 4,800 applications into 2.50. It comes to 12,000. Being forfeiture of 4,000 shares held by Mr. David for non-payment of the balance allotment money and first call. Share capital debited at 9 rupees per share called up and securities premium debited at 5 rupees per share. Fine. This is what I explained already. Now let's make the final call on the remaining 1,96,000 shares which are there in the market with the shareholders. Share final call account debtor 1,96,000 into rupee 1. To share capital account 1,96,000 into rupee 1. Being final call at the rate of rupee 1 per share due on 1,96,000 shares. Now let's collect the second call or final call money. Out of 1,96,000 shares, the 6,000 shares which were allotted to Mr. Madan, he failed to pay the final call. Therefore, we were able to collect the final call money only on 1,90,000 shares, and that is what considered here. Bank account debtor 1,90,000 shares into rupee 1. The amount is 1,90,000. To share final call 1,90,000. Being receipt of share final call money on 1,90,000 shares. Now, we are going to forfeit the shares, 6,000 shares allotted to Mr. Madan. Share capital account debtor, 6,000 into 10. Why 10? Called up value per share excluding premium at this stage is 10 rupees. So that is why 10 rupees. To share first call which was not paid by Mr. Madan, 6,000 into 4. To share final call 6,000 into 1. What he has paid? Madan has paid application money and allotment money. Don't get confused with the excess applications that would have been submitted by Mr. Madan. Though he filed some excess applications, to get 6,000 shares allotted, the excess application money paid by Mr. Madan would have been adjusted against the allotment money due on 6,000 shares. So Madan would have paid only the balance money of allotment on the 6,000 shares. So on the whole, Madan has paid 2.50 per share on application. Then Madan would have paid how much on allotment? 2.50 per share on allotment excluding premium. So Madan would have paid only 5 rupees, right? 5 rupees is a paid up value for Madan. Well, this is what he has paid excluding premium till the stage of forfeiture of the 6,000 shares allotted to him. So 2 share forfeiture account, 6,000 into 5, 30,000 being the forfeiture of 6,000 shares held by Mr. Madan for non-payment of 2 calls. Now the company has reissued all the 10,000 shares forfeited from Mr. David and Mr. Madan. To whom they were reissued? To Robert. Here the name is immaterial because Robert has paid the money. So bank account debtor 10,000 into 8, 80,000. Share forfeiture account debtor 10,000 into 2 because par value 10 rupees. Issue price 8, therefore there is a loss on reissue or the discount of 2 rupees which is considered here, and that figure is adjusted against share forfeiture account of those 10,000 shares which were forfeited and now being reissued. So 10,000 into 2, 20,000 rupees. 2 share capital account, 10,000 into 10, 1 lakh. Being the reissue of 10,000 shares to Robert at a discount of 2 rupees per share, which is assumed to be loss on reissue, which is adjusted against the share forfeiture account of those shares. Now the balance money in the share forfeiture account of those 4,000 shares plus the 6,000 shares will be transferred to capital reserve. Once the forfeited shares are reissued, the forfeiture amount, if any, in that account cannot be retained. The amount has to be transferred to capital reserve as per the procedure we follow in India. So forfeiture share account debtor 22,000 to capital reserve 22,000, being the balance money in the share forfeiture account of the forfeited and reissued shares are transferred to capital reserve. Let us come to know how the 22,000 has been calculated. Have a look at the working down here. Total forfeited money on 10,000 shares. From David, if you refer the forfeiture journal entry of David, you can come to know 12,000. I have clearly explained how the figure has been calculated. And in the case of Madan, if you refer the share forfeiture entry for the 6,000 shares allotted to Madan, you can come to know 30,000 rupees is a share forfeiture account on Madan's account. So the 30,000 put together 42,000 is a total share forfeiture account balance. From the 42,000, the loss on reissue or the discount on reissue of the 10,000 shares at the rate of 2 rupees per share, which comes to 20,000, is subtracted. Therefore, the balance 22,000 is the amount transferred to capital reserve. I hope you clearly understood my explanation on this problem. This is one of the very important problems, and so I suggest the learners please first take down the problem, pausing the video, keep the problem with you and listen to my explanation so that you will gain a better understanding of this particular topic. And in the description, I have given the links for other videos I have released on company accounts specifically related to issue of shares. Watch those videos as well to gain a better understanding of this concept named issue of shares. Thanks for watching this video. Have a happy learning, everybody.